Welcome to episode 5 on Finquity's podcast.
Hello. How are we doing, my co-host?
I am doing pretty well. We're coming back from a long holiday.
Yeah,
Looks like there
happy
was
4th of
Canada's Day.
yeah, happy
Yeah,
4th of July, everyone, for those who celebrate.
yeah. So there was Canada's Day. So that I think closed the markets on July 1st. I think that was Monday, right? And then
Tuesday.
July
Or
4th,
yeah,
Tuesday, yeah, Tuesday, and then July 4th. That was Independence Day for the U.S. So the domestic markets over there were basically closed. So overall, it was a very short trading week. But nonetheless, there were a lot of things that have happened. Okay, so let's just go through the market recap. So overall, markets are still
very
trending
bullish.
higher.
Very bullish. We're going all-time highs, right?
That's right. So pretty bullish so far. I think TQQQ is at like 84 now.
84, 85. Yeah.
84, 85. Yep. So based on our last week's forecast, I just said that there wasn't going to be any terrible news going on. Markets, I said, would be neutral. And that if nothing bad happened, things would just continue the way it was, and it looks like that was the case.
Absolutely. I think there was no negative news of a paramount amount for anything to fall down. So
Exactly.
The markets have gone just their normal, slightly upward momentum.
Yep. That's right. And just looking at the VIX, it's still chopping. It's up a bit compared to Monday. It's at like 17 now, but on Monday it was at 17.19. Today, right now, it's 17.48. Right. So VIX is going up and down. And I think at this point we're hitting the lows, and we're just gonna keep chopping until something really bullish happens or something really bearish happens at this point.
And there might be a few big events that will decide how the rest of the month will continue. But let's get into that discussion later. I mean,
that's right.
Looking at Bitcoin as well, it's been a pretty good week.
Pretty bullish.
Pretty bullish.
Yeah, pretty bullish, eh?
Yeah. Looks like we started Monday around 107, and then right now Bitcoin is at 108.
108, but it was at 111.
Yeah,
it was at 111 at some point.
Yeah.
So
yeah.
That was pretty bullish, and it makes me feel that Bitcoin is sniffing out for some sort of growth in the markets. No way does it act like this when environment is risk off. So this is a clear indication that we're still in a very bullish environment. QQ is going up. Bitcoin is leading the way. And if trends continue, I have no doubts that Bitcoin will continue pushing up higher to new all-time highs.
Absolutely. And I'm just even looking on in the lieu of next week's potential events, Bitcoin is very calm. And I think the best point about Bitcoin is that it reacts even on days where the markets are closed. So for example, this was a short week for US and Canada, Canadian markets. And you could see the Bitcoin was still reacting to events as they've progressed. And despite the big events happening next week, Bitcoin is calm. Very, very calm at 108.
Yeah, exactly. And we can discuss about what will happen later on as certain deadlines come by. But as of now, I'm quite confident that Bitcoin is basically telling us that things are looking good, and to expect things to look good unless an event kind of changes that. Now, on that note, in terms of the weekly updates, in terms of events, several things I think that are important to discuss includes the passing of the big beautiful bill that happened on markets closing on Friday, or Thursday. Yeah, so just to give a rundown of what the big beautiful bill is and why it's pertinent to the markets and to US and Canada as a whole. So the bill is a multi-trillion-dollar spending package that is designed to do multiple things. The first one is to lock in the tax cuts that were made in 2017 during Trump's first presidency. So you have a permanently lower corporate tax rate, and you can like search it what the numbers are. I don't remember exactly what it is. I think it was like 21% or something, 21%. With also the middle class keeping more of their income with their tax cuts, and more importantly, with new tax cuts and deductions, including deductions for people who are seniors. So when they get Social Security, they have a deduction up to $6,000 now. Children get a $1,000 investment account when they are born.
Mhm.
And there was one more. There was one more thing.
About tipping.
Tipping. Yes. So there was
Mhm.
also increased deductions on tippings and overtime. So for those people who work in restaurants and they get tips, and for those who work overtime, which is many of us, we can get a bigger deduction, or more importantly, should I say, Americans can get bigger deductions.
Absolutely.
So
Um,
that was pretty important. And then there was also other things that pertinent to the bill as well. They rolled back health. The expectation is that 10 million people are going to lose healthcare coverage, and while that can be a very politically controversial topic, which we won't really get into in this podcast, they will also increase their spending on defense spending with $150 additional increase in the budget, and also they'll spend more on immigration enforcement. Altogether, with all these other policies and other policies that we haven't discussed, the bill is expected to add at least $3.3 trillion on the existing deficits that do exist. So it's already what deficits we have plus $3.3 trillion. I
that's a
think over
lot.
the next 10 years,
That's a lot.
which is a lot.
Just a
It
lot.
is. It is a lot. And why I think the bill is economically beneficial for equities, because it can increase growth in the short term, maybe for the next couple of years or so. Um, what worries me, and I think what worries a lot of long-term investors, is the fiscal health of the U.S. government, and to what extent will this come down to a larger cost later on the road. I'm more interested in being worried about the fact that the U.S. government now spends over $1 trillion in interest payments.
Oh,
If they continue, if they continue to spend like drunken sailors, and they add more on the tab, my worry is the bond market's going to react very violently later down the road. Currently, TLT is not acting that way, although it is chopping a bit. I think on Thursday,
yeah.
market close. So it was a bit of a red there. And I think the biggest worry in the intermediate term is, are there going to be enough foreign buyers and domestic buyers to buy up all those new treasury issuances? Because the U.S. government is now issuing more and more debt just to pay the interest and to meet these spending targets.
I think the concern in the market, at least, is not too much. I think we should be concerned economically for sure, but the markets, they reacted to this news very, very well. That's not to say strongly, but there was a very bullish reaction, because primarily corporate cuts, tax cuts, is going to really benefit in the short run all of the large companies, and even the overtime income and the tipping income. This is definitely something that does benefit the financially well off, because they're able to do a lot of commission type consulting work, as you know, or they're gonna accept tips on commission type consulting work and so forth, giving them quite a bit of a tax benefit. So the market is at least not seem to have priced in the long-term effects that the debt might impact the U.S. market, and things seem to be happy. But what do you think is going to, like, what is the balancing act?
So my biggest worry here is, at this point, I think everyone on both parties recognize that something needs to be done in the long term to balance the budget. And right now, the government is running at a 6% deficit. You know, and why that is very beneficial to keeping the economy growing and making sure that people are employed. That has to be balanced at some point, whether it's today, tomorrow, or 10 years from now down the road, when the next generation has to pay for this, right? And the biggest question here for equity markets that I pose is, when that balances, or when that begins to get cut, what will happen to equities? What will happen to growth? The fact is that the government right now is spending stimulus money as if it's in a recession right now, as if it's in war.
The strange thing to me is, like, for example, the corporate tax cuts, they are very good for the market short term, but that also means that the U.S. government, they're going to be earning less money that they can allocate for their debts. So not only are we adding $3 trillion to our debt, we're not able to pay off the debt or have reduced income capacity to pay off that debt. So that's a very troubling factor.
Yeah, and one of the biggest dilemmas so far is, how do you attract corporate capital to coming back to the U.S., right? The biggest issue is that a lot of these corporations, and I can name drop a couple of them, like Apple, for example, right? They store hundreds of billions of dollars of cash overseas, like in Ireland, for example, or funny enough, like Cayman Islands, for example.
Right.
These companies use very complex tax structures, which are legal, by the way. It's not illegal. They're legal to avoid tax. And while that is very beneficial for those companies and for potentially shareholders, though that cash that's sitting in their accounts is not doing anything. They're stuck in those accounts, and they're not invested back into the US. They're not being invested to create jobs, and they're not even invested back into the markets. Like, they're not even doing stock buybacks because the capital may get taxed for doing so.
Right.
So the question that I think a lot of economists may be asking is there even a purpose in having a corporate tax that's high when you're dealing with tax havens like Ireland, who have little incentive to close that loophole and fix their tax structures? There's a rising argument that their governments should implement a VAT tax, which is basically a consumption tax, something that I think we have here in Canada with the HSTs and GSTs, and that can tax consumption and not tax the corporations who are in charge of producing services. I mean, and companies.
The worry there then is that the tax is now pushed under the consumer, as opposed to the producer itself, which can then have that can lead to ethical dilemmas or ethical quandaries about who is responsible for paying for the taxes, the product. Because when you could argue, for example, if large corporations are avoiding taxes by hiding their money, and then the consumers have to end up paying their portion of the tax, then is that really fair to the customers? Is that really fair for the economy? And then is there now less responsibility on the corporations themselves?
Yeah, I definitely see the problem with that. It's something that I've kind of wrestled myself. But the fact of the matter is that the companies right now, because the tax rates are just not competitive compared to tax havens, they're parking their cash in their accounts, and that cash is doing nothing.
No, yeah, it's worse than that too. I feel like there's a lot more tax loopholes that can be exploited to avoid paying tax. Like, for example, you just taking debts on unrealized gains. Now all of a sudden you're no longer in profit, you're in fact in debt. So that can reduce how much the entity, like the CEOs or the corporate board who own the company with a vast majority of the share, they show themselves in debt, and they end up paying a very, very small fraction of what they should be in theory.
And unfortunately, there's not a lot of political will in addressing that at the moment. because the government, is happily able to service the debt, right? But at some point in time, there's going to be a concern of how can we close this deficit. This deficit is 6%, and it's currently
Right.
rising
Yeah.
aggressively too. So I don't doubt that within the future there is going to be legislation put in place to find any way to get an extra dime in closing this deficit, or even just rapidly cutting spending. Now, the other concern that I have seen so far, especially on Truth Social, is that Donald Trump has been advocating for Jerome Powell to cut rates now.
Mm-hmm.
And while that may sound irresponsible from an inflation point of view, because you might stimulate inflation and overheat the economy, the fact of the matter is that the federal budget now is $1 trillion in paying interest alone. If we can slash that interest to something lower, that can be one way for them to balance the budget.
Right.
But the problem is that responsible. And I feel that Jerome Powell, what he's doing is that he knows that this is unsustainable environment, and he's trying to push the Congress and the White House to cut spending properly, which can degrade growth, cause the economy to slow down, and that can allow him to cut rates.
Right.
But as we can see, that's not happening right now.
No.
The opposite is happening. So he has to keep these rates up. And my biggest fear is Trump continues to make these comments, and it can undermine the Federal Reserve's independence.
Right. I don't know how things will shape up, especially after this presidency. What happens often happens is the results of a presidency, they usually carry over to the next few presidencies. Like, for example, a lot of the tax cuts that Trump implemented in his presidency from 2016 to 2020, a lot of them stayed just during Biden. And now,
That's right.
And now in 2025, they've been added on to. So now that his actions have left an impact, and they'll continue to do so for 3 years, I really wonder how things are going to shape up in the economic sense, especially with the U.S. debt in the next couple presidencies. Because I don't think the next president would be in a rush to fix the U.S. economy or to balance the balance of trade and the balance of debt. So that makes me wonder. The second thing it makes me wonder is about the tax cuts, because I think at the moment funding is pretty arbitrary. It seems like we're adding a lot of spending for purposes that might not deserve as much attention. For example, I think in the big beautiful bill, there was like 150 billion allocated to for the defense. I think another 100 billion to ICE, making ICE one of the largest governing bodies. What was the term you used?
I think it was like the largest domestic law enforcement agency within the U.S. Yeah.
Wow.
So in my mind, I ask myself, is that a good use of capital, right? Where you're spending that much on defense spending and immigration, when that can be geared more towards infrastructure investments or paying back the debts. So that's my biggest concern, right? And we try to keep this this topic as apolitical as possible. We don't want to get into the nitty gritties, but looking at how the bond market might react in the future, I genuinely do think that if this doesn't get resolved within the next 4 years by the end of his presidency, gold might be like a long-term inflation hedge, because I don't see bonds retaining value if the debt continues to skyrocket at the rate that it is. And that's my biggest concern. From an investing point of view, for portfolios, they either do 60-40, 60% equity and 40% bonds. I don't think that portfolio can work if there's a world where the U.S. government is no longer financially responsible and they're no longer able to meet debt obligations.
But to play devil's advocate, people have been saying the U.S. debt has been rising for decades, even since like the 80s, 90s, and into 2000s. So like the question a viewer might ask is, well, people have been saying that forever. What's changing now?
The thing that's changing now is that, first of all, the government now spends more on interest than on defense, which hasn't happened in its history. The second thing of all is the absolute number in terms of the interest. The interest increases every year, and it has exceeded a psychological milestone. It has exceeded $1 trillion. $1 trillion, you can do a lot with $1 trillion. You could
Right.
you could literally double the defense spending and still have some left over after you add that interest expense. But unfortunately, now that's being spent away on nothing, right? You're sending that amount to foreigners who own those bonds and to investors who own the bonds. As of right now, the good news is that most of the investors of U.S. debt are domestic. But at some point, you're not even going to have enough buyers to buy the domestic. The only way we could do this is if you force the Federal Reserve to monetize the debt and make them print money and buy back the debts. And in that case, I don't think that's a definition of financial responsibility at that point. That's just something else.
Absolutely not.
And no doubt that will cause inflation to go up.
Mm-hmm. I
So
suppose this is just like a very short-term solution to a longer-term problem that's going to be left unaddressed as we move into the rest of the year.
That's right.
Years.
Yeah. And then with the big beautiful bill comes along its critics.
Mm-hmm.
One of the major critics is Elon Musk. So for those who follow his Twitter account, he has made a lot of questionable comments on how he does not like the bill. Clearly is not liking it, and his comments have struck a chord with a lot of Trump supporters and Republicans and Democrats, and that has been reflected in the Tesla stock price. So Tesla has gone down because of that.
Right.
On the overnight markets. So that has been an ongoing thing. I don't know whether or not Elon Musk is serious about forming a third party in America, called the America Party or something like that.
Mm-hmm.
But make no mistake, this bill is definitely very controversial. It will have a long-term side effects with the equity and bond markets, and we won't know. I can't tell you or forecast what's going to happen years down the road.
Yeah, I mean, like, to sound like a broken record, but I think things are going to need to change. I mean, people have been saying that for decades, but hopefully change is on the horizon in terms of managing the US debt, because it seems like in the last 25, 30 years, it's just been the promise of balancing debts, but then by the time that the person who makes that promise, they continue on their expansionary growth deficit spending regime, adding more and more and more to the debt. So some might say that adding the debt is necessary for growth, and I think it definitely is. But then, who is going to be the one to say, "Hey, it's time to cut the debt"? Because when that happens, growth will stall. We can't avoid that. So
that's right.
And when
that's right. And someone's going to take the blame for that. Someone's going to take the blame for the stalling and regression in growth.
It's who's going to take the accountability? That's the real question. And then, and when, for example, some might say right now we're in the all-time highs, and right now I think there are recessionary fears. Maybe now is not the time, but in an environment where there is like a very little recessionary fear, the question is that the time for action that's going to reduce growth, but then also reduce the U.S. debt?
That's right.
But the worry is when that happens, people aren't going to be happy, because
that's right.
it's going to impact the lives of many individuals. be far fewer
Yeah.
opportunities. There'll be
Yeah.
less personal growth, less personal GDP or GDP per capita. So who is going to take the hit? And at the moment, the system is geared to where no one takes the hit because
Yep.
if the Democrat or the Republican Party they enact just policies, well, they are going to lose the favor of the populace,
Yep.
making
That's
them
right.
less likely to win the next election. And most likely,
That's right.
what will happen is their policies which led to deficits, like less spending, they're gonna get
Yep.
overturned, and we go back to
Yep.
more spending. So
Right.
we're in a very interesting scenario.
Yeah.
I hope the
That's
Fed
right.
I hope the Fed keeps their strength in this, and then they can pressure the government to act in a
Mhm.
slightly more responsible manner.
Yep.
And the result of that is yet to be seen. Actually,
Yes. Right.
speaking of that, we did have a little bit of that last Tuesday, right?
Yes, that's right. Jerome Powell basically, made a slight comment that he would have made he and his committee would have voted for cuts had the tariff policies not been in place. And many have taken that as a critic against Trump's tariff policies, where he's basically saying that your tariff policies are causing inflation or inflationary fears, and that is keeping us from lowering rates. Now, I don't know if Trump has caught into that or if he has made another comment of Powell on Truth
Mm-hmm.
Social, but nonetheless, I think that comment alone has communicated to the equity holders there in the markets that the Federal Reserve has been ready to cut rates since the beginning of the year. They
Yeah,
were they
presumably like
were they
January,
were
February.
ready.
Yeah, yeah, yeah.
Yeah, they were ready. It's just that they needed to see whether or not the tariff policies would happen, and when they happen, what effects that it would have. And currently, unfortunately, maybe it has some sort of effect, and it's being reflected in the data only now. So it's still going to be a couple months, at least until September, until the first real chance of rates gets cut.
And we might even see the data like the effects be realized months and even years downstream. So I hope the Federal Reserve is doing a good job keeping
Yeah,
up to date with all
yeah,
the chaotic elements this has added to managing the interest rates, and managing growth as well. But do you think the FOMC meeting, or the Jerome Powell's comment, is that why we saw a consolidation in the QQQ and other like
it
risk on
it,
assets?
it it could have, but I'm more towards using your model and just saying, like, the model like gave out signals. It hit specific technical indicators, so I attribute to the drawdown.
Mm-hmm.
But nonetheless, that comment is quite hawkish, and it is a direct attack on the tariff policies that is in place. So that's how I would kind of leave the comments there. Now in terms of the podcast, I do want to talk about some of the forecasts that we're gonna make,
Yeah.
especially a specific deadline. So July 9th, there is going to be the deadline for Trump's self-imposed tariff extensions,
Right.
where all those countries that have been involved in the trade war, that deadline is going to push them to either make an agreement, make a concept of a plan, or no plan at all. So we've yet to see is our equity markets prepared to look at that, but not only is there going to be that deadline, but on that day there's also going to be very important data, including the CPI data.
Yeah, I think that's gonna be a very, very big day. And I think in the overnight market so far, there seems to be a small change, but there doesn't seem to
Yeah.
be as much change. And I think what's really going to drive the market in either direction is going to be what develops on Monday and Tuesday. The fact that the markets are not that much in fear is a sign. I think the sign can be a positive sign, because it is just showing that, as we said a couple times over the last few weeks in our podcast, has been that, people have been treating Trump's words less and less with like face value. So when he says the deadline is July 9th, people are very uncertain if the deadline really is July 9th and how serious his actions are going to be. And what have you heard so far about the other countries' responses? I think I heard something about Vietnam, but I haven't heard about any other news from any other countries regarding meeting his deadline.
Yeah. I find it a little bit strange too. I think that the big trading partners like the EU, for example, they're basically resigned to the fate that whatever happens is basically going to happen due to Trump's self-imposed demands. Anything else,
Mm-hmm.
and other countries like China has literally just given up. They went from 145% tariffs to something less than that, like 30%. So
Mm-hmm.
to them, a victory has already been, given to them in some form of way.
Right.
But overall, I think many countries recognize that the deadline may be extended just depending on Trump's will, on when he wakes up, depending on his mood.
Mm-hmm.
And also, there's nothing they can do because at the end of the day, they depend on the US as the consumer of last resort.
Right.
So even if they can't make a deal, it's most likely that they're still going to shadow agree whatever Trump demands are going to be
Do you
for
think
those
they're going
specific.
to request more extensions? Because I feel like that's what's likely to happen. I don't think people are ready to like. This is a very very intricate and detailed topic with thousands of variables at stake, right? So I
Yeah.
feel like no one is really ready to sign something definitive. What
Yep.
I envision is more of a continued extension process.
Yeah.
Just
That's
through
right.
like as you said, mere agreements, just face value agreements. But then taking the taking a very long sweet time to actually
Yeah.
sign something official or permanent.
Yeah.
So
Yeah. That's right.
I don't know. I don't know where the market can be. I mean, obviously,
Yeah.
if Monday or Tuesday, the deadline is approaching, and then we see on Truth Social or other media where other countries or Trump are in disagreements, then I think the market will likely not will probably likely turn bearish for the week.
Yeah.
And
That's
then
right.
but if we hear nothing, is that a good sign? Is that a bad sign? I feel like that's going to be a very chaotic time in that sense.
Yeah, and not only that, on Thursday, there's on Wednesday after CPI data, there's also going to be core PPI data.
Mm-hmm.
So there's lots of inflation data next week, and overall, I think that depending on whether or not the data reflects that the tariff policies has meaningful effects, markets will respond accordingly. For example, if they notice a CPI has become way hotter than expected, and they know that's because of tariffs, the markets will not react well, especially if Trump, doesn't extend the deadline. And there's a real genuine fear of that.
Right.
So that could be one of the events that might bring up the VIX and cause some sort of risk-off environment, or even cause a technical pullback on TQQQ. I have no way to forecast what Trump wants. So again, I will leave that up in the air for this week. There's just simply too many uncontrollable variables to predict here.
I think the best bet might just be another week of wait and see. But this time,
Right.
Really wait. This maybe last week it was like a 60% chance of waiting because you could have like 40% of money deployed. I think this week it would be better to stay largely in cash.
That's right. Stay largely in cash if you're not in long positions, and just wait for a real pullback. And then if you are using our system, you can kind of, find those opportunities and lock in.
Absolutely, because I
Play.
feel like because of how assets like QQQ, even NVIDIA, and
Yep.
a lot of like these semiconductors, Nasdaq related equities, they've all approaching this pullback zone. So in our model,
Yep.
it's what we call the zone one, and in
Yep.
zone one, when prices tend to reach there, they tend to bounce from the zone and they bounce towards a mean we call the regression line.
Yeah,
And so our advice would be if your equity is something that might be in zone one by end of this week, and I think start of next week, it might be a good idea to pull out and wait and see what happens throughout the week before looking at the direction and
that's right.
reinvesting. Now, do you
Yeah,
think
yeah, that's
next
right.
week's events are going to lead to something that's going to, um, leave the market in chaos for a long time, or do you think it'll be a short-term chaos into a medium-term stability?
I think that if the deadlines are not extended, there is a real possibility that we're going to enter a risk off environment,
Mm-hmm.
simply because the reason why the market has bounced back the way it is that they bet that Trump is, pulling a taco, right? Like he's gonna chicken out from tariffs, and he's going to give deadline extensions because he's pro equity.
Right.
But if it's proven that he doesn't do that, and he changes his mind, and he's doesn't want to extend it whatsoever, and everyone's going to pay like exorbitant tariffs, that real possibility will, in my opinion, crash the markets. The markets will not shrug that off, because then they might genuinely feel like this time he's different, even if it lasts for more than a day. If
Mm.
he doesn't give any indications that he's open-minded to changing that deadline, markets will respond accordingly, just like they did in April, and just like they did when they saw him uh, extending those deadlines, and markets ripped. Markets will definitely come down afterwards.
What's really funny to me is that like the markets, you can see how exuberant the market is, how happy how the market is pushing for growth and just increase in value and all-time
Yeah,
highs. And
yeah,
despite all of this, which is like the most surprising thing, is how bullish the market is. And
that's
so
right.
I, at the same time that I worried that he might not extend the deadlines, I think
Yeah,
in the case that he does, it might result in a 2 3 month, maybe a longer 6 to 5 month bearish period
yeah,
at
that's
most,
right.
at most, and then I think we would probably see a return to a bullish direction in the market.
That's right. That's right. So I think that even if it crashes, if markets, just accepts that is the reality of the world, eventually they will, recover. It's just that for those who bought the top here, that does not bode well for them. So that's the problem.
Yes.
Personally speaking, I'm not super long right now, just because I see the uncertainty, I see the euphoria,
Hmm.
and I want to wait for better opportunities at this point, and wait until the system tells me that there is better opportunity.
Yeah, I would drew myself from a TQQQ myself, so and I'm
Mhm.
just in a wait and see environment.
That's right. That's right.
Awesome.
Yeah, and yeah. So I think we're close to calling this a wrap.
Yeah.
But one more thing I like to talk about is about our motto. So recently, we have launched a closed beta test for select users, people who are maybe interested into paying our $20 um, per month subscription fee to access the model and to test it out, see if it's to their flavor. We are open to trials as well for those who feel like they want that time to build some confidence in the model.
Hmm.
But just leaving out here, on our record, that we are at that stage, and if there is a not large enough demand, we may be open to launching a open beta test at some point later on in the future.
Yeah. So if you're interested, please feel to follow along our development journey. And we, oftentimes when we refer to trades, we often see different types of trades that we can see. Some keywords are breakouts, trend continuations, mean reversions, and momentum reversals.
Mm-hmm.
These are like the four strategies our model aims to capture. And we try our best to update you along with our strategy, our model,
Yeah,
on how the
that's right.
market is doing every week, and we'll continue to do so. So please feel free to support us. Feel free to try out our model, to request a demo, and we'll
Yep.
get back to you on that.
Perfect. All right. Yeah, and that is it for today's episode.
Thank you so much.
All right. Thank you. See you next time.
Bye bye.